So now I want to get to where I think gold and silver are headed, and that I've been tracking, as you are well aware. We've been tracking the commitment of traders reports, and this has been fairly accurate so far. And back when gold was up here in the 1300s, I wasn't buying as much. I was making my monthly accumulation, but no large purchases. And I was waiting for it to tumble, and I predicted these regions, and I bought some silver on this first pullback. But what I said when I was buying it was that I was going to only take a partial position and keep some capital on the table and see how much of their position they cover. I didn't buy a lot because they didn't cover their position entirely. They went from a little over 300,000 contracts to 200,000. So that wasn't enough of a covering. In fact, if you look throughout history, that was still a higher level. That was about equal to this one peak back here in January last year. So I took a partial position on this dip and reserved capital for a further plunge. And I'm looking at it now, and what I see is that, they've covered about half their position on gold. But when I look at silver, I bought on this initial plunge here in this 17-something area. That corresponded with this minimum in their contracts. But what has happened is they've actually increased their short position, suggesting an even further fall. And again, where we're at today is actually higher than at any time in history up until just the past few months of this year. So this is, the middle of this year. So the odds are that silver and gold are going to take a further plunge, I believe, and I did some further analysis on here. Here's gold, and it had made this shoulder head, and I predicted when it was up here that it had to revisit the 200-day moving average. So I bought silver when gold and silver revisited their 200-day moving average, and then I predicted that it was going to rise and make a head and shoulders, and then it fell and it violated what is called the neckline. And when it does that, you take the middle of the neckline from the top of the price here to the middle of that neckline, flip it upside down like a hinge, and that is the predicted move. And we have fulfilled that predicted move on gold. However, I see no support area in here, and the commercials are still very short. And so I don't, even though it fulfilled this predicted move of the head and shoulders pattern, I think it could drop further. I'm hoping it does. I'd love to be able to buy gold down in this 1050s, 1060 area. I think that's awesome. The longer this stuff goes on, the more time that I have to get prepared for the things that are going to happen with the next great recession/market crash, which is somewhere right around the corner here. This can't go on forever, the stock market rally and no recession. Now, I went and it's the same chart of gold, but I've drawn a Fibonacci sequence on here. So you've got the 38% retracement, the 50% retracement, the 62% retracement. And what I see here is that we've already blown through any Fibonacci support. So the Fibonacci doesn't really add anything here as far as major support. I just see nothing in here for support, suggesting big buying opportunities coming up. Getting to silver, I had drawn a trend line. I expected it to violate that trend line. There was a triangle pattern going on here, and usually when there's a triangle, it breaks in one direction or another, and it was so far stretched from its 200-day moving average, and the commercials had gone so short that I was expecting it to drop to the 200-day moving average and this trend line at least. And so when it got down into this region at the trend line, that's when I made a purchase, and I said I was going to reserve more capital for later purchases. So I still make my monthly purchases. But again, I'm waiting for this to go somewhere. Now, there is support from these peaks and that one dip right there. So there's support in the region that we're currently at. So this could go up. But when you take a look at the commitment of traders and gold having no support zones whatsoever, I have a feeling that this is going down. Silver has another support zone in this area, but the real strong support would be a double bottom down here in the 13s. And boy, would I love to be able to buy silver in the 13s. Now, when I wrote this, I established this neckline, and there was in one of the videos I did back in August, I think, or September, I was talking about that it's going to go down. It'll probably go to that long-term trend line. If it violates it, it's going to the 200-day moving average. Gold and silver always have to revisit their 200-day moving average someday. So the choice was the 200-day moving average could rise to meet the trend line, or it could blow through the trend line, which it did. The trend line was like at 1780 or something like that, and go down and revisit the 200-day moving average and then bounce. And it did that, and it created a right shoulder, and then it violated it. This chart, for some reason, the bar is missing here where it falls through this. It's left a gap, but that gap isn't real if you look at a shorter term chart. And it did that. It blew through it. But if you take the neckline here and you make a hinge, that hinge is predicting somewhere down in here. And now we